Hello and welcome to Startup Central, India's only daily show dedicated to startups, technology and entrepreneurship. We have a power-packed show lined up for you today, from RBI's guidelines for wallets to the online sales war that we just saw with Amazon and Flipkart offering the hottest deals this Diwali season. And in fact, first up, let's go to that big story. The big focus on the show today is around of course, the RBI's guidelines for PPI or prepaid payment instruments. The guidelines that were out recently is expected to have a massive impact on how we do our wallet transactions on apps like Paytm, MobiKwik, among others. And the big takeaway is, of course, that all wallet players will now have to ensure KYC compliance as well. So all wallet companies will have to identify their customers with their address and identity verification as well, which will of course significantly up their compliance costs. Secondly, remember, these guidelines permit interoperability of wallet between banks and accounts and wallets, which essentially means that you can transfer money between wallet of different companies and also bank accounts. And to discuss the impact of the guidelines of the digital payments ecosystem, we have MobiKwik, which is a pure play wallet player. Let's get on board Bipin Preet Singh, the founder and CEO, now joining in. Bipin, many thanks for speaking to us at ET Now. What do you make of the RBI guidelines for wallets? Other players have called it a disadvantage for standalone mobile wallets. What's your own sense?
I think the intent of the new RBI guidelines is in the right direction, but I think a lot of details in terms of how it should be implemented, I think it's a little confusing, because I think overall the fact that all the minimum KYC wallets have to be converted and done full KYC for, I feel that's a bit very stringent, given just a week back or 2 weeks back we had a new guideline in the gold category, where now you can buy gold more than 50,000 rupees without without disclosing your PAN number. So in a way, what we are saying is between different instruments, whether it is buying gold or comparing that to a digital instrument where there is a very clear trail of where the funds are coming from and where the funds is going, there is a clear distinction which is being made, which in my view is not correct. If you can buy gold more than 50,000 rupees, why cannot you have a wallet up to even 10,000 or 20,000 rupees without doing full KYC? So I think there is some disconnect there, and also I think there is some confusion there, because I don't think that KYC necessarily solves all the problems, including related to cyber fraud and cyber crime. It can play some role in that, but it doesn't solve all of those problems, because just with KYC you cannot catch criminals, and there has to be a better solution there. In terms of, I think, the standalone wallets versus what other wallets are there, which is maybe a payment bank or a captive wallets, I think I feel that in fact standalone wallets have a bigger advantage, simply because right now in India you have many platforms which have created wallets just for their own ecosystem, whether it is a cab company, whether it is an e-commerce company, whether it is some other kind of anchor, where they have wallets where the users can use only that wallet for that use case. I think a lot of those wallets will be at a loss, because once the wallets become interoperable through UPI, the users would migrate to those wallets which have the widespread coverage and which have more diverse use cases, and not necessarily limit themselves to those wallets which cover only one or two use cases. The second thing is, I think when you look at the cost of compliance in terms of banking, etc., I think a full KYC wallet for a standalone wallet company will be much cheaper compared to doing full KYC and opening a savings bank account, let's say with a payments bank. So I think from that angle also, I actually think that the full KYC wallet will have a lot more advantages, given that even for a payment bank, you cannot actually, in the savings bank, you cannot do things like cashback, etc. You cannot directly do loyalty points.
KYC alone cannot really help, figure out a lot of problems and issues. That's a very valid point that you've raised. But since we are talking about, now that these guidelines have been put in place, will it require a dedicated investment and manpower from your side?
We have 65 million users, out of which 20 million users are those who really need full KYC in our view in the next 12 months. So we are looking to invest around 100 crore rupees in this over the next 12 months, and we are looking to deploy, do it in a phased manner, which means that more than 50% of these should be done by the first 3 or 4 months. And so overall the investment that is required for doing this KYC is around 100 crores. We need to have agents available throughout the country, not just in metros, but also in smaller cities and towns. So if you do the maths, that means 15 lakh KYC have to be done in a month, which means 50,000 in a day. So overall we think that that requires at least 7 to 8,000 people on the ground every day to do KYC.
Bipin, help us understand. You're talking about 100 crore investment that you're looking to get, especially with respect to the KYC compliance. But does that really put you, and of course the other wallets, at a disadvantage? I mean, you rather put that money in improving the business, isn't it?
I think RBI should think seriously about creating giving the wallets a more level playing field. I know their intent is right in terms of getting the KYC done for as many wallets as possible, but I think there are certain things like fund transfer which is not allowed in for minimum KYC wallet, which is in my view is not very conducive to the development of digital payments in this country, because what that means is if you open a minimum KYC wallet, you cannot transfer that money to any other wallet or any other bank account. So I think that is something that definitely needs to be addressed.
All right, Bipin, many thanks for speaking to us and giving us a perspective into those RBI guidelines and the word really